Welcome to Behind the Law with Justin Clark, the show that takes you behind the law and answers your toughest legal questions.
Welcome back to another edition of Behind the Law. I'm here with attorney Justin Clark and with Robert Palmer, and today we're talking about new avenues to get you back in the housing market if you've been through a short sale or a foreclosure. Exciting things lie ahead, and this is going to be an exciting show. This is going to be filled with more information than you could shake a college class at. Hey, guys.
What does that mean, college class?
I have no idea. You're going to get a 4-year education in the next 30 minutes on TV, then 30 minutes next week, and an hour today for you radio listeners. This is fantastic, having two of you on at the same time.
Before I forget, Rob, I got to say something.
Sir.
Can you imagine it was exactly 1 year ago today that I rolled into this studio and sat next to you and said, I'd like to say I'm very proud to announce that I have a new child, Sophia.
1 year today?
It's been a year. Can you imagine?
Congratulations, my friend.
It's her first year birthday today, and I just want to say, Sophia, happy birthday. Daddy loves you. I'm glad that you love Daddy now because, you know, you didn't love Daddy so much at the beginning.
No, she wanted emancipation 6 months ago.
Because Daddy, Daddy works a lot. So it took a few months for her to start loving Daddy. Now she loves Daddy so much, and I love her too. Happy birthday, Sophia.
That is so nice.
Happy birthday.
Thanks. And I just am so happy to have a good friend of mine, a good friend of the program, a good friend of the station, Robert Palmer, with us today. We're going to spend the whole hour talking about, my clients, Robert, have been through a bad time.
Yeah, as a lot of people have.
And now my clients want to get back in the market.
Right.
How do we get back? Is now the time? Is it a month from now? Is it 6 months ago? I don't know. I want to talk to you about someone who's gone through a short sale or a foreclosure or a bankruptcy or just a tough time in general. I want to talk about when the time is to get back into this real estate market.
Yeah, I mean, I think the honest answer is just as soon as possible. And for a lot of people, they went through a bad time. They've had that short sale, that foreclosure. And now, there's a point where they've rebuilt their credit. They've had to put up with renting for a couple years. I mean, that's a tough transition.
Yeah.
If you think about going from you're a homeowner, you've had your home, you love your home. Unfortunate circumstances caused you to lose that home via foreclosure, short sale, whatever the situation is, and now you're renting for a couple years, and a lot of people view that as a big step backwards. And so I think a lot of people who are renting are ready to get back in, and so the answer is as soon as they can, as soon as possible. And that's what we want to talk about a little bit today is some new lending programs that we've come out with to try to help people get back into the market quicker, a little faster, trying to cut down those waiting periods because home prices are going up. I mean, you've seen it, I've seen it. You've got clients that were upside down a year ago, and now they've got some equity. We see clients who were looking at a house in a particular price range a year ago, and now they're back and that same house is up 25, 30%. The sooner the better, I think. And then, too, we have this interest rate battle going on as well, where the Federal Reserve is determined to pull back on their bond buying programs, which will result in higher interest rates. It's already started to. Mm-hmm. It's really just a matter of how fast and when and how high do they go. But at some point, they are going up. There's no real question about that. I don't think anyone ever had a question about that. But now that it's here, people are shocked.
Now, let me ask you a question, and I don't mind to talk about my personal story at all. I have a condo in Thornton Park, right? Mm-hmm. Way underwater, 1-bedroom condo. I overpaid for it because, my realtor friend at the time said, oh, there's a great deal. You have a ton of equity. She was lying to me. That's okay. I'm not mad at her. I bought it with an ex-girlfriend of mine. We bought the condo together, but now, as I just told you, I have a kid who just turned 1. And I basically I was told I'm moving to the suburbs, right?
Yeah.
We have a kid now. We're moving to the suburbs. Like, no, we're not. I'm staying in Thornton Park. I'm not moving. We're moving to the suburbs. Like, we're moving to the suburbs. I was doing a short sale on that condo in Thornton Park, and now I'm renting. I've been renting for a year and a half. Short sale has been done for about a year and a half. Now I want to go buy a house, okay? I don't want to rent forever because the rental rates are asinine, to be honest with you.
Yeah, they are.
Mm-hmm. Robert, when do I start looking for a house? When am I able to get a mortgage to buy a new house?
Yeah, the general answer, and the answer has been 36 months. Most people are having to wait 36 months from the date of the short sale, the date of the transfer. So whatever day you went to that closing agent, went to the closing with Justin, signed that deed over to the new buyer, the bank accepted less than was required, making it a short sale. There's a 36-month waiting period for most loans, FHA, for most Fannie Mae programs. We, however, are rolling out a new 24-month program. So now if a home buyer can put 20% down, we're going to have a 24-month waiting period. So again, get people back into the market a year sooner, which I think makes a big difference. I think what we're seeing in today versus a year from now, we're going to save a lot of clients a lot of money by letting them get in 1 year sooner. Go ahead and get in today. So we're talking about 2 years out of that short sale minimum. If you can put 20% down, if you need a lower down payment program, now you're talking 3 years after the short sale. And then of course it's important to rebuild your credit. Be paying some bills on time.
Right.
Maybe you have some credit cards you've paid responsibly from before the short sale. Continue to do so after the short sale.
Now, I have clients who are going through a short sale, so clearly most of the time when you're doing a short sale, you are not paying your mortgage payment. But then they're not paying the mortgage, so they say, well, screw it. I'm not going to pay my credit cards. I'm not going to pay the student loan. I'm not going to pay any of this. Is that a good idea?
Nah, it's absolutely terrible. I mean, the key is that if that mortgage becomes an isolated incident, then the impact it has on your credit is going to be much, much less. We see clients where they paid everything on time. All they had was a short sale, and now 2 years later, their credit score is back in the 700s. They're poised and ready to buy a property. So, I think it's important to pay the bills you can continue to pay. I understand there's a lot of people that have had problems with negative equity, have had to, pursue a short sale, look at other alternatives for their house, but you should never use that as an excuse to pay the other, not pay your other bills. And I think too, it's important for people to realize that, by hiring an attorney and getting in there and getting the short sale done without a deficiency judgment, without the bank coming back on you, is very, very important to getting back in that market. Because here's the deal. If you're trying to get back in the market, it's been 2 years, but you're still paying on a $50,000 deficiency judgment that the bank filed against you because you didn't get an attorney involved, didn't negotiate, didn't get that waived, that could prevent you from buying a home.
We're going to take a break, but before we go, is your house underwater? Depending on your situation, you may be eligible for an interest reduction through the HAMP and the HARP programs. Call right now. Schedule a free consultation with the offices of Gregory and Clark at 321-282-1055. Justin Clark may be able to lower your monthly payments and save your home. Don't pay more than your house is worth. Call now. We'll be right back.
The realtor doesn't do it themselves. They send it to the title company, who's making $800 on the deal, to basically make sure that the rest of your life's going to be okay. It's not a good plan.
Stay tuned. Justin Clark will be right back with more Behind the Law. Welcome back to Behind the Law, the show that takes you behind the law and answers your toughest legal questions.
Welcome back to another exciting edition of Behind the Law. I'm here with attorney Justin Clark of Gregory and Clark Attorneys at Law, and our very special guest, Robert Palmer of RP Funding, one of the most proactive lenders in the mortgage market today. Today, we're going to talk about getting back in the market after a foreclosure or a short sale, the legal ramifications, and how you can take advantage of new loan programs being offered out there today.
What scares me about people who do short sales is the local realtor in their neighborhood who's friends of their friend from the school, whatever, they come and say, you don't need a lawyer. All you need is a realtor to do a short sale. Let me tell you something. When you do a short sale, the entire reason for doing a short sale is to get you out from under that deficiency. The bank, make no mistake, can sue you for the difference in what you owe on the house and what you sell the house for. I think that you need a lawyer to make sure you get that deficiency waived. And I hear so many times where realtors will say, you don't need to get a lawyer. I'll handle the short sale for you. And what they do, let's be totally honest here for a minute. What they do is they send it to the title company and say, okay, title company, because I'm sending you business, your job now is to negotiate the deficiency on the short sale. The realtor doesn't do it themselves. They send it to the title company, who's making $800 on the deal, to basically make sure that the rest of your life's going to be okay. It's not a good plan.
Yeah, we talk to thousands of home buyers a month at RP Funding, calling in, getting pre-approved, wanting advice, wanting guidance. And I can say hands down, we see much better results from the ones who utilized an attorney when they did their short sale. We see much, much fewer deficiencies. We see less problems. Usually their credit seems to come back faster because things are handled, correctly. And again, it's not the case in every. I'm sure there's some lawyers who do a terrible job, and I'm sure there's some real estate agents or title companies who do a great job. But out of the thousands of people that we see, we do see a better result overall from the clients who utilize an attorney in a short sale, which then helps them get back into the home buying market sooner. Because let's face it, that's what everybody wants. You don't lose a house and then think you're you don't want to be a renter for the rest of your life. It's how soon can I get back in, and that's
Exactly.
where having the right attorney and then taking advantage of some of these new loan programs can get you back in sooner. Close to that 24-month mark, which is it's a big cutoff of the 36 months.
When you, Robert, whenever we do shows together like this, is only the second time I think we've ever done it. I did your show yesterday with you. You're doing mine. I think that we should probably argue to pay Rob Newton less because he has to say nothing.
That's right. Yeah, Rob,
It's unbelievable.
Hang on
I would say, at least half the fee for Rob, half the talent fee. What do you think?
We'll just split it, and then you can still have the same thing.
Let's do that.
We'll work it out for the guy.
I'll see you guys tomorrow. I got to go now. No.
Unbelievable. I want people out there to know and recognize that, and I know this for a fact. People are scared to go check their credit. People who are renting, who did a short sale, are scared to get back in. I'm getting a little bit scared myself that it's going to be too late to get back in soon. The prices are up unbelievably high. I mean, we're 30% in most neighborhoods, 30% above where we were at this time last year. House values. Interest rates, Robert, you tell me about interest rates. What's going on?
I mean, interest rates are up about 30% as well. We went from the low threes and we went up 1 full percent, a little higher in some cases. So you're talking about a 30% increase there as well. So when you combine those two factors, payments are significantly higher. And then you throw in some other factors like FHA. A lot of home buyers were using FHA, Federal Housing Administration loans, with just 3.5% down. They've increased their premiums considerably, which makes the effective rate even higher. So, payments are going up and up and up. And we've tried to put in some creative ways to help people get the payments back down. We're encouraging a 5% down conventional program over a 3.5% down FHA program. We use the money they would have paid in fees to somebody else that they don't have to pay to us that they can use toward that extra down payment. But prices have gone up, and I think the best time to buy was really 6-7 months ago. Not that today isn't still a great time to buy, but in my opinion, I think it's going to continue to get worse. And again, there's no crystal ball. We don't know. If I had known 6 months ago was the magic time, we'd have made a much bigger deal of it.
Exactly.
You don't know what the Federal Reserve is going to do. You don't know what the housing market's going to do. But we are seeing a lot of positive signs on every economic report coming out that housing is moving in the right direction.
Now, in the second segment today, I want to talk about that process. Like, how do I go from I did a short sale, now I'm renting. I want to talk about the process of calling RP Funding or calling a realtor or whatever and actually getting back in the game. I want to figure out how much can I afford to pay. Can I buy a $300,000 house? Can I buy a $200,000? I want to talk about how that really works.
Time now for a break, but if you're having problems with your mortgage that could cost you your home, remember that the offices of Gregory and Clark are your one-stop shop for saving your home. Short sales, foreclosure, bankruptcy, refinancing, all under one roof. Call right now, 321-282-1055. We'll be right back.
Is your house underwater? If you owe more than your house is worth, Justin Clark may be able to get you an interest reduction through the HAMP and HARP programs. It's an easy way for you to keep your home or even just lower your monthly payments. Just give the offices of Gregory and Clark a call at 321-282-1055. There's never any charge for your consultation. So let Justin show you your options. We'll be right back.
This group of lawyers that helped me out with the modification on the 80%, but my 20% got left on my credit as a charge-off.
Stay tuned. Justin Clark will be right back with more Behind the Law. Welcome back to Behind the Law, the show that takes you behind the law and answers your toughest legal questions.
Welcome back. You are watching Behind the Law with Justin Clark of Gregory and Clark Attorneys at Law, and we're taking your calls right now at 855-297-9696, toll free 855-297-9696, and you'll notice three people on the panel today. Most of you will recognize because you see him all over town. This is Robert Palmer of RP Funding, and boy, the best loans in the world, right?
Hey, you're trying to take care of our customers, Rob.
Yeah, you certainly do. Very proactive is what you're doing.
I like that. I'm excited to get the invitation today to be here on the show with you guys.
We're happy to have you.
This has been great. It's been fun so far. We've got a lot of fun minutes left here. So
I said see, and all the people on the radio were going, what's he talking about? We're also on television, folks. So if you're listening to this program right now, you get to watch it next Saturday at 10:30 on WRDQ TV 27. But exciting news coming into the break, and we've got people holding on the phones. We might as well get to them right now. Manny in Orlando, how can our panel help you?
Hello?
Yes, go ahead.
Yeah, how are you, sir? I got a question about my loan. My house, I did a modification about a year ago. Back then, I used to have a 80-20. This group of lawyers that helped me out with the modification on the 80 to 80%, but my 20% got left on my credit as a charge-off.
Right.
What can I do to clear that out or work with that? Because I never heard back from them anymore.
Yeah, that's actually a good call. And leave him on the line, Laurel, if you will, because so it sounds like the 80. What happens, Robert, back in the day especially, people were doing 80-20 to avoid PMI, avoid having to put a down payment. So they would get what's called 80-20 loans. You would get two different mortgages basically on the same loan. And it sounds like the big loan that you have now is fine. You did a modification, your payment's now affordable. You still have this 20% loan hanging out there, which is certainly affecting your credit. And Robert, help me out with this too, because credit-wise, what I see a lot of people do with the 20% loans, first of all, a lot of them got written off.
Right,
Under
absolutely.
that Attorney General settlement, a lot of them just got written off. But let's make no mistake, a charge-off is not a write-off. If you charge it off, it essentially means that they're selling it to another company to come after you. It's still there. If you go sell your house, it's going to be there. The best thing to do, I think, is either work something out with them or try to settle it with them, and then it's going to show up in your credit report for as debt settled for less than amount due. But, I mean, make no mistake, it's going to be a negative reporting on your credit.
Yeah, I mean, having that large, because most of the times these 20% mortgages, I mean, you're talking on a $100,000 house, which would be $20,000 on a bigger house, even more. So you're talking about a large charged-off debt that was housing-related, which does make it more harmful. I think it would be important if you're looking at, trying to get back in the housing market, trying to rebuild your credit, to take steps like Justin said, either settle that debt, get on payment plans with that debt, do something to get it moving back in the right direction. Which again is unfortunate. Maybe when you went through the modification, you thought it was going to be taken care of, but if it's out there and it's charged off, you should reach out to them and try to make some kind of arrangement to resolve that situation.
Now, Robert, let's say that we do decide, okay, he's delinquent for 2 years on this 20% loan, and we call them up. He owes, say, $30,000, and I call and I settle it for $5,000. Obviously, it shows up on your credit report as debt settled for less than amount due. But is that the worst thing in the world? I mean, is he going to be able to get financing 2 years from now or no?
I think that's the key. I mean, you're looking at a 2-year waiting period pretty much from an event like that. But the key is the clock can't start until you resolve the situation.
Right.
So, and again, not saying either settle it and pay it off in full, get on some type of payment plan. From the day you show that you are moving forward in resolving that situation is when the waiting time would start to get you back into the housing market. So the sooner you can take care of that, the sooner you can tackle that, the better off you'll be.
I would say from Manny's perspective, he's probably okay because the first mortgage is resolved, so it sounds like he's living in the house and going to stay there. However, you don't want to let it linger forever because, maybe he has 2 kids down the road and wants to get a bigger house. I think now is the time probably to resolve that and start that clock of rebuilding your credit ticking. Right?
I think, too, you've experienced this, Justin. A lot of these charge-offs, they get packaged and resold, and all of a sudden some new company pops up in your life who's calling you daily, by the minute, by the hour, trying to collect that debt because they picked it up at 20, 30 cents on the dollar, and you get some of the most aggressive debt collectors possible when that happens, and there's possibilities of a future judgment being filed. I mean, there's just, again, when you have a debt of that size, I think it's very important to be proactive, get some help, move in the right direction, get someone involved, and try to get things resolved.
People come to my office all the time and say, well, I haven't heard from that second mortgage in a year. It doesn't mean it's gone away. I mean, it's still there. And if they sold that debt, someone's going to come after them at some point.
Absolutely.
We're going to take another break, but you can get legal advice right now by calling Justin's office at 321-282-1055. Associates are standing by. We'll be right back.
And I'm finding myself in a situation where it's hard to get my credit score up to anything over 600.
Stay tuned. Justin Clark will be right back with more Behind the Law. Welcome back to Behind the Law, the show that takes you behind the law and answers your toughest legal questions.
John in Orlando, what's going on?
Hey, guys.
What's
I found
up, John?
myself in a situation to where I got 10 years, no credit cards, no car loans, no nothing. And then I was told to get a couple unsecured cards, which led to a couple of unsecured cards. Nothing major, though. Only total up to about $2,000 in actual credit. I got one negative on my credit, the charge off for like $500 that it's paid. And I'm finding myself in a situation where it's hard to get my credit score up to anything over 600.
All right, where is that score right now? Have you checked it recently, and what service you're
597.
using? Okay, and what service you're using to check that?
Credit Karma.
Okay, gotcha. A couple big factors. How many months have you had those credit cards?
My average history is a year and a half.
Okay, do you have some that are within the last 6 months that are newer?
Yeah.
Okay, and then what kind of balances are you carrying? You said you've got about $2,000 in limits. What do the balances look like on those cards?
No, that's part of the problem, I realize.
Yeah, that's probably the biggest problem. I mean, I've seen people's credit scores drop 100 points just by paying the utilization down to where they had a high utilization, they were able to pay it down near zero. And again, it's important to do that before the statement comes out, because what the bureaus report is the statement balance. So if you get a statement in the mail, then you mail in a check and pay it down to zero, and then you use it again, it's whatever was on that statement, which is before your payment is normally credited. So I tell people to mail the payment a little sooner so it can get credited before the statement comes out. Really focus on that utilization. The two big things you can do to get your score up is, one, don't take out any new credit. And once all of your trade lines are at least 6 months old, you get a little boost. So when you hit the 6-month mark on that newest trade line, that will give you a boost. And then the biggest thing you've got to focus on is getting your hands on that couple $1,000s it's going to take to get the balances paid down to as near zero as possible. And you're going to see your credit score skyrocket.
John in Claremont, you're on the air with Rob Newton, Robert Palmer, and Justin Clark. Welcome to the show.
Hi. I have a question about related to credit scores. A couple years ago, under the advice of Clark Howard, I froze my credit and wanted to know, does the credit score still move independently of that, or is it actually frozen where it was at the time that I...
Now, the credit score continues to move. The problem is no one can get to it. So what happens is when you freeze your credit, whenever a third party tries to pull your credit, they get blocked. And then you have to call with a PIN number or give a temporary release on the freeze. But again, your credit score is still moving. It's just hidden. So when they freeze that credit, they basically freeze the ability for third parties to view it and to obtain the score. But they're still doing all of their scoring models, all of their reporting, all of their calculations. They just don't share that information with anyone else. So you haven't done any long-term damage to yourself. There's no negative effect of freezing credit. If anything, it prevents unwanted credit inquiries, so there is some benefit there. But you do have to jump through a couple extra hoops when you're ready to borrow money, because now you have to either release the freeze for 24 hours, give special authorization for someone to pull your credit. So you've got to be a little more active in getting your credit pulled to move forward with a credit transaction.
That'll wrap up our discussion, but there's still so much to talk about that could save your home. So if you have questions, give the offices of Gregory and Clark a call right now at 321-282-1055. There's never a charge for a consultation, and it could save your home. We'll see you again next week right here on TV 27.
Thank you for watching Behind the Law with Justin Clark. Be sure to join us again next week as Justin takes you behind the law and answers your legal questions.